Welcome to the deep dive. Navigating the world of finance, planning for your future, it can sometimes feel, well, less like a clear path and more like trying to read a map in the dark.
Definitely.
So today, we're aiming to flip on the lights. We're doing a deep dive into a really powerful force shaping that landscape, the global wealth management service market.
It's a huge one.
Right. And our mission really is to take some recent, pretty in-depth market research and just distill it for you. Cut through the numbers to show you the current trends, the regional powerhouses, and maybe most importantly, what's actually fueling this sector's massive expansion. Think of it as your shortcut to understanding a really vital part of our global economy.
And when you look at the sheer scale, the numbers themselves, they're genuinely eye-opening. So back in 2021, the global wealth management service market, it clocked in with revenues over $1.5 trillion.
Wow, trillion.
Yeah. But here's the really compelling part. Our projections, they show that figure surging to well over $3.4 trillion by 2033.
That's more than double.
Exactly. And this isn't just, steady plodding growth. It represents a really robust compound annual growth rate, CAGR for short.
Right, the average over time.
Precisely. A CAGR of 6.9% across that whole period, 2021 to 2033. That kind of consistent expansion. It signals a significant and clearly increasing worldwide demand for sophisticated financial planning and, well, security solutions.
Okay, 6.9% globally. That's strong. But let's unpack this a bit. We see this huge global growth, but where exactly is this wealth management boom really taking root? Because it must differ, right?
Oh, absolutely. The pace, the drivers, they vary quite a bit, region by region. It's fascinating stuff.
So where should we start? Let's begin our journey maybe in North America.
Sounds good. North America, as you might expect, it remains a dominant force. Its market value started around $650 billion back in 2021.
Okay.
And it's projected to more than double over $1.4 trillion by 2033. That maintains a pretty solid 6.7% CAGR.
And I imagine within North America, the U.S. is the big engine there.
For sure. The United States is the clear behemoth, projected to climb from over $526 billion to more than $1.1 trillion by 2033. That's a respectable 6.4% growth rate on a huge base.
Okay, 6.4%. But here's what I find really interesting in these numbers. The contrast with Canada and Mexico. Their growth rates are actually higher.
That's right.
Canada's looking at, 7.3% CAGR? Going from roughly $65 billion to over $163 billion. And Mexico's even more robust, 8.1% CAGR, projected nearly $59 billion up to over $140 billion. That's quite a difference. What does that tell us? Is it market maturity or?
That's a great observation. And what's fascinating here is exactly that point. While the U.S. market is massive and mature, its growth is steady, right?
Yeah.
6.4%.
Right.
But in Canada and Mexico, we're seeing faster acceleration. That often points to a mix of things, maybe a younger demographic, with growing wealth entering the market.
Okay.
Or perhaps increasing financial literacy driving demand for professional advice. Could even be sort of targeted policy changes encouraging investment.
So less saturation, more room to grow quickly.
Exactly. It's a clear signal of, let's say, evolving financial landscapes within the region itself.
Okay. So from North America, this established powerhouse, let's cross the Atlantic. Europe, a continent with a really long history of wealth management. How's it adapting and growing in this evolving space?
Europe's definitely a key player, too. As a whole, it started at just under $400 billion in 2021.
Right.
And it's expected to reach almost $850 billion by 2033. That's a 6.5% CAGR overall for the region. Slightly slower than North America, but still very significant growth.
And within Europe, where are the hotspots?
Well, you have the traditional strongholds. The United Kingdom, for instance, is seeing really vigorous growth, projected to hit over $163 billion by 2033. That's a 7.2% CAGR.
Higher than the regional average.
Yep, and Germany is also set for major expansion, rising to over $211 billion. Then you've got consistent growth from places like France, Italy, Russia, all projected to be well into the tens of billions by 2033.
Okay, but here's where it gets really interesting for me, looking at the data. And maybe a little surprising, the rest of Europe segment.
Ah, yes.
This diverse group, it isn't just growing. It's boasting an impressive 9.3% CAGR. 9.3%. Expanding from about $21 billion to over $53 billion. That's a huge leap. What's bubbling up there?
That is a standout figure, isn't it? That aggressive growth in the rest of Europe, it's often a clear indicator of, let's say, less saturated markets. Markets that are now experiencing significant economic development, a rise in affluent populations.
Hatching up, maybe?
Sort of. Our research suggests it could be fueled by increased cross-border investment, maybe rapid digital adoption, bringing these wealth services to new segments.
Right, technology lowering barriers.
Exactly. And perhaps, like we discussed with Mexico and Canada, an emerging financial awareness in regions that were previously less engaged with formal wealth planning. It's a really dynamic part of the European picture.
Okay, fascinating. Moving across the globe then, let's turn our attention to Asia Pacific. This region just seems to consistently show impressive performance in, well, almost everything economic these days.
It really does. And wealth management is no exception. It's growing from around $309 billion in 2021 up to a projected $737 billion by 2033. That's a strong 7.4% CAGR overall.
7.4. And I assume China's a big driver there?
Within Asia-Pacific, yes, China predictably leads the charge. About a 7.7% CAGR, growing to over $263 billion by 2033. Massive numbers.
Okay.
However, it's definitely worth highlighting India. Its growth rate is even higher, actually, 8.2%, climbing from around $31 billion to nearly $83 billion.
8.2, well.
And Taiwan is particularly notable, too, achieving an impressive 9% CAGR, moving from roughly $9.8 billion to over $26 billion by 2033.
The 9%.
Yeah, these figures, they just underscore the rapid wealth accumulation happening and the increasing demand for sophisticated financial services across really diverse parts of Asia. It's not just one country. Southeast Asia as a whole is also strong, around 7.6% CAGR.
All right, so broad-based growth there. Okay, let's head south now for some significant growth stories down there, starting with South America.
Okay, South America is on a trajectory from around $78 billion in 2021, projected to hit over $167 billion by 2033. That's a 6.6% CAGR. Solid, steady growth.
And who's leading the pack there?
Brazil remains the regional leader, projected to grow from around $34 billion to over $74 billion. But Argentina and Colombia are also contributing significantly. They're projected to reach over $24 billion and $17 billion, respectively, by 2033.
So similar to Europe's overall rate, roughly. Steady expansion.
Pretty much. The data indicates steady, robust expansion across the continent. It signals, growing economic stability, perhaps, and increasing investment opportunities.
Okay, next up, the Middle East. The report highlights this region as showing, and I quote, truly remarkable performance.
And it really is. A 7.5% CAGR overall, climbing from roughly $69 billion in 2021 to over $165 billion projected for 2033.
That feels like a region really stepping up.
It absolutely is. Saudi Arabia is leading this charge. Projections rising from around $26 billion to over $62 billion.
Okay.
But look at the UAE. Its growth is particularly strong, an 8.2% CAGR.
8.2, again, like India.
Exactly, rising from over $13 billion to nearly $35 billion. Qatar is also set to reach over $11 billion. And get this, the rest of Middle East segment shows an impressive 8.9% CAGR.
Almost 9%. So what's driving that? Diversification.
That's likely a big part of it. Economic diversification efforts, beyond oil, lots of significant infrastructure projects, and also a young, increasingly affluent population looking to manage and grow that new wealth.
Makes sense. Okay, and finally, rounding out our world tour, Africa. The data suggests it really stands out.
It certainly does. Africa actually has the highest ETR among all regions, a staggering 9.5%.
9.5%, wow.
Yeah, expanding from around $35 billion in 2021 to a sizable $98.6 billion projected by 2033.
Almost $100 billion from a $35 billion start. That's huge growth. Which countries are key there?
Nigeria and South Africa are identified as the leading contributors. They're projected to reach over $41 billion and $48 billion, respectively, by 2033.
So what's the story behind that exceptional rate?
Well, this exceptionally high growth rate, it suggests a rapidly developing market, but also one with significant untapped potential still. It's likely driven by things like urbanization, a growing consumer class, and crucially, increasing access to digital financial services, leapfrogging maybe some older systems.
Right, the digital leapfrog effect. Okay, so we've just traveled the globe, right? Charted billions, actually trillions of dollars in growth across incredibly diverse economies. If we zoom out now, look beyond the individual numbers, the regions. What are the overarching themes, the common threads? What are the real drivers for this consistent global upward trend in wealth management? What's propelling this whole sector forward?
Yeah, it's a good question. What it really boils down to, I think, is a powerful confluence of factors. Three main things, maybe. First, you have these robust, diverse regional contributions we just discussed. I mean, every major market, from North America right through to Africa, is showing promising gains. No region is really being left behind.
Right. It's broad-based.
Second, and this is crucial, is that pervasive digital transformation. It's just reshaping how services are delivered. We're talking AI-driven investment platforms, mobile-first planning tools, you name it.
And that makes it cheaper, easier?
Both. It improves efficiency for the firms, definitely. But critically, it's also democratizing access. It's bringing sophisticated financial advice to a much wider audience than ever before.
Okay, that's huge. And the third factor?
The third is simply a growing global financial awareness. Just more people, more families worldwide are recognizing the importance of getting professional guidance. They need help navigating complex markets, planning for retirement, securing their financial future.
So increased demand meaning increased digitally enabled supply.
Exactly. That demand for expert financial guidance and fundamentally security, it seems to be a universal and frankly escalating need.
Okay, so just to summarize that for you, the listener, the global wealth management service market, it's clearly on a solid, significant upward path. And it's not just about more money sloshing around or only serving the super rich anymore.
Right.
It seems to be driven by these fundamental shifts in how people, maybe like you, approach your finances, combined with how technology is enabling new, more accessible services for, well, potentially everyone.
And why does this matter to you? That's the key question, isn't it? Well, whether you're interested in managing your own personal finances more effectively, or maybe you're considering a career in this incredibly dynamic field.
Which is clearly growing.
Absolutely. Or even if you're simply aiming to understand these broader global economic trends, this kind of deep dive hopefully provides a crucial shortcut. It helps you get well informed about a sector that really does impact financial security worldwide. It touches lives everywhere, from New York to Lagos, as the numbers show.
Okay, so given all that, this strong, undeniable growth, fueled by digital transformation, fueled by that growing financial awareness globally, here's something to really mull over.
Okay.
What new innovations or services might emerge in the next, say, 5 or 10 years? Things that could completely redefine how we access and use sophisticated financial planning. And maybe more importantly, how could these very trends further democratize access to financial expertise? Not just globally, but perhaps specifically for individuals or communities who historically have had the least access to this kind of specialized guidance.
That's a great question to ponder.
Definitely food for thought. We'll leave it there for this deep dive.
Welcome to the deep dive. Today, we're really digging into the wealth management service market. It's a sector that's seeing a massive shakeup right now. We've got a fantastic source here that really unpacks the major forces driving it, the significant hurdles it faces, and also the key emerging trends shaping how wealth is managed globally. So our mission for this deep dive is pretty straightforward. Pull out the most important nuggets of knowledge for you. We want to help you understand what's truly transforming financial advisory services and, maybe how it might impact your own financial journey down the line. We'll touch on quite a bit, things like hyper-personalized strategies becoming key, how cutting-edge tech is changing financial advice, and even, interestingly, how ethical investing is really shifting the game. It's absolutely true. This market isn't just, growing. It's fundamentally evolving. What's really striking is just how dynamic it all is. It seems caught between these immense growth opportunities on one hand and some very real challenges on the other. It's definitely a complex landscape, but, well, it's also one that's ripe with these entirely new approaches that are, frankly, redefining the future of wealth management.
Absolutely. Okay, so let's start with what's actually fueling this growth. Our source really points to a key driver. The expansion of the global affluent demographic. We're seeing this sort of unprecedented rise in high net worth individuals, right? Both in developed countries and increasingly in emerging economies, too. And it's not just the amount of money, is it? It seems like the sophistication of these newer wealthy clients is also fundamentally reshaping things.
Precisely. Yeah, that's a great point. This demographic isn't just getting wealthier. They're also demanding incredibly sophisticated, really personalized strategies. They're actively seeking comprehensive solutions for, well, everything from complex investment management and detailed estate planning right down to crucial tax optimization. And this surge in demand, it's a major catalyst. It's genuinely pushing firms to tailor their offerings with much greater precision and, frankly, a deeper understanding of individual client needs than probably ever before.
And then there's the tech side. That seems to be one of the most disruptive forces we're seeing. Our source talks a lot about the integration of technology, things like artificial intelligence, AI, predictive data analytics, even robo-advisors. So when we talk about AI and these robos, how exactly are they revolutionizing the actual delivery of these services? Are they replacing people?
Well, that's the interesting part. It's less about replacement, I think, and more about enhancement and democratization. The real game changer here isn't just what AI or robo-advisors can do. You mentioned real-time portfolio tracking, more accurate forecasting, which is huge. It's how they're making sophisticated tools more accessible. They enable that real-time tracking. They significantly enhance the accuracy of investment forecasting for sure. And for the firms themselves, it really streamlines operational efficiency. It lets them scale in ways they couldn't before. Plus, for the tech-savvy clients, this digital evolution brings, well, a really welcome blend of transparency, automation, and convenience to their financial planning. It's actually forcing human advisors to sort of up their game, focus more on a really complex, personalized advice, the behavioral coaching, things a machine can't easily replicate.
Okay, that makes sense. It's like the tools are changing, but also the values of investors seem to be shifting too. We're seeing this really powerful movement towards ESG, environmental, social, and governance investments. Our source suggests that today's investors, maybe especially younger generations like millennials, they're not just looking for returns anymore. They're prioritizing ethical and sustainable opportunities.
Oh, absolutely. This is a profound shift, not just a trend. Wealth management firms are actively responding by integrating specific ESG criteria directly into their portfolio construction and their offerings. So this means they're not just looking at a company's balance sheet anymore. They're really scrutinizing its environmental impact, how it treats employees, the integrity of its leadership. The belief increasingly is that these factors actually contribute to long-term financial resilience, not just, feeling good about the investment, though that's part of it too. It's really about aligning with client values. And for the firms, it positions them as leaders in long-term value-driven financial stewardship. It's becoming table stakes, really.
Right. So we've covered some incredible tailwinds driving this market forward. But like any dynamic sector, it's not all smooth sailing. It faces strong headwinds too. Let's maybe tackle some of the significant hurdles now, starting with one that probably impacts a lot of potential clients: the sheer cost of wealth management services.
Yeah, you're right to bring that up. The source is quite clear on this. We're talking about pretty elevated advisory fees and often substantial minimum asset requirements just to get in the door. And the consequence is pretty stark. These high costs mean wealth management is simply out of reach for most middle-income investors. This is particularly true in, say, emerging markets where traditional banking services might still be developing or penetration isn't as deep. This financial barrier, it genuinely limits broader market expansion and unfortunately kind of restricts the democratization of wealth planning services that arguably more people could benefit from.
And another challenge, which, okay, it sounds a bit dry, but I imagine it has huge implications for the firms themselves, regulatory and compliance complexity. It's not just extra paperwork, is it?
Oh, not at all. It's far beyond just paperwork. These regulatory hurdles, things like Know Your Customer, KYC, anti-money laundering, AML checks, plus, extensive fiduciary responsibilities. They're much more than just administrative burdens. Complying requires massive and ongoing investment in digital infrastructure, in compliance technology, in legal expertise. And what this often means in practice is, well, slower client onboarding processes, which can be frustrating for everyone, and definitely increased operational costs. All of that can really slow down a firm's growth and its agility in responding to market changes.
Yeah, I could see that. And then beyond those internal challenges, there's the market itself. Performance is vulnerable to volatility, investor hesitancy. How do firms even begin to plan for the long term when, global events can shift everything so quickly? A pandemic, geopolitical issues.
That's a critical point and honestly a constant challenge. Factors like geopolitical instability, sudden economic shocks, global crises. Think about the last few years. They can significantly dampen investor confidence. People become more risk-averse naturally. It can really disrupt carefully laid long-term plans. And these uncertainties don't just affect individual investment behavior, they also directly decrease the inflows of new money into advisory platforms. That poses risks to both the assets under management, the AUM, and the recurring revenue streams that these firms really rely on. So, yeah, achieving long-term stability is a constant juggle.
That really highlights a kind of paradox, doesn't it? There's this immense growth potential driven by increasing wealth, but also this significant barrier to entry for so many people. It almost feels counterintuitive. But okay, despite these obstacles, the industry isn't just standing still. It seems to be adapting in some really proactive and frankly interesting ways. Let's shift gears and talk about some prominent emerging trends. Our source mentions the adoption of hybrid advisory models first. What does that look like?
Yeah, the hybrid model is gaining a lot of traction, and it's quite ingenious, really. Yeah. It's about combining the best of both worlds, human expertise with digital platforms. So a key aspect here is the benefit. You retain that crucial personal touch, the relationship aspect of traditional advising, while also offering more cost-effective and scalable solutions through technology. This allows firms to reach a much broader audience, not just the traditional high-net-worth individuals, but also what's often called the mass affluent segment. People with significant assets, maybe in the hundreds of thousands up to a few million, who might not have qualified for or needed the full bespoke white glove service before, but still need quality advice.
Right, opening up access. We're also seeing, apparently, a very visible shift toward goal-based financial planning. It sounds like it's less about just chasing the highest return percentage now, more about life goals.
Exactly. That's a really important shift in philosophy. The primary focus is no longer solely on, say, beating a benchmark or maximizing that top-line return number. Instead, clients are prioritizing concrete life goals. Things like, can I retire comfortably? How do we fund our kids' education? Well, can we afford that second home? So wealth managers are adapting by offering more holistic plans that directly align investments with these specific personal milestones. It helps clients achieve financial wellness in a way that feels much more meaningful and, importantly, measurable to them. It's very client-centric, reframing success around the client's life, not just the portfolio's performance.
That makes a lot of sense. And lastly, our source points to a stronger emphasis now on multi-generational wealth planning and family office-type services. This seems tied to a big demographic shift happening, right?
It is, very much so. This trend is really contextualized by the significant transfer of wealth that's unfolding right now across generations, the great wealth transfer you hear about.
Yeah.
So firms are responding by developing really specialized solutions, things like succession planning for family businesses, sophisticated trust management, even family governance advice helping families manage wealth across generations smoothly. The goal here is to ensure continuity and build deep trust, enabling these very long-term relationships that can genuinely span multiple generations within a single family. It's about preserving not just the financial capital, but also often the family's values and legacy across decades. It's a much longer-term view.
Okay, so if we were to try and summarize this whole deep dive,
Yeah.
the wealth management service market is clearly at a really transformative point. It seems driven by this expanding global wealth, incredibly rapid technological adoption, and definitely evolving client expectations. Yet at the same time, it absolutely has to navigate these significant hurdles, cost barriers keeping people out, complex compliance demands, and the ever-present market volatility.
I think success in this incredibly dynamic landscape, looking forward, it's probably going to belong to those firms that can really effectively blend that digital innovation, blend it with personalized human service, and also show a clear commitment to social responsibility, like we talked about with ESG. It's really about finding that sweet spot between tech, touch, and values.
So a final thought for you, our listener, to maybe chew on. Given all these powerful trends we've discussed, the tech, the costs, the changing values, the goal focus, how might your own approach to financial planning or perhaps seeking financial advice need to evolve in the coming years? How can you harness these advancements, these new models, and maybe overcome some of those potential hurdles for yourself? What really stands out to you as the most impactful change in how wealth is managed today, and what might that mean for your future financial decisions?